want to welcome everyone here, and this is a forum to talk about investment ideas and a frame of reference. And we have the task of explaining how to navigate the current business climate. And these two gentlemen will explain to us how we can frame the current events that we're facing off with and how companies are grappling with them at a time where the business climate changes in 30-minute increments. Joining us here is Ray McGuire, president of Lazard, as well as the 70th U.S. Secretary of the Treasury, Robert Rubin. They have both told me that I can call them Bob and Ray, or Your Honor. I want to start with this question of where are
Your
we?
Honor, if you want.
Roberto.
That's Bob. That's what it is. Yeah.
Bob, Your Honor.
There were people in Congress who called me things far south of Bob, I'll tell you.
Well, hopefully we don't go there. But I do want to start with just where we are in the day's news, which is the tariffs, and this idea that we got 25% tariffs actually put on Mexico, on Canada, an additional 10% tariffs put on China. I want to start with you, Ray. How are companies making sense of this?
You know, it is we're in the early stages of this tariff diplomacy, if you will, geopolitical diplomacy. And boards and senior managements are now trying to assess the implications. It's been advertised for a while, and today it's begun to be implemented. Having said that, there's also the suggestion that in April there's going to be a reset, so there'll be a review. And most investors, most companies do take a long-term view. And so we'll see how this early move on the chessboard plays out. People are assessing, companies are assessing the implications. But for the most part, there's a long-term view that is now being contemplated. We've not seen this level of tariff, at least in modern times. We've seen it historically, the implications of which historically have been pretty dramatic. And we'll see today whether or not the implications are going to be equally as dramatic.
Bob, how do you take a long-term view when it's unclear what the destination is?
Well, I have the following view. I think these are going to adversely affect us with respect to inflation. They'll adversely affect us with respect to growth, adversely affect productivity. But I think there's an even bigger point in some respects, Lisa. We have treaty obligations with Canada and Mexico, and we have now violated congressionally approved treaties. What does that do to our credibility around the world with respect to our commitments? And that can adversely affect us geopolitically and adversely affect us economically. We have spent all these years since World War II developing alliances and allies, supported by all sorts of commitments on our part, and it's been enormously in our economic self-interest, all in our economic self-interest and our geopolitical self-interest. And I think we're putting all that at risk.
Ray, do you see companies thinking about it that way, or dealing with international partners who are calling into question some of the framework of being able to come through?
So the answer is that, and I agree with Bob, companies are being forced to now contemplate variables that historically we haven't contemplated. Remember, the peak of U.S. manufacturing happened in 1979. Between 1979 and today, we have relied on a supply chain that has been so dependent upon our international partners, especially our closest one being Canada and Mexico. And so as that begins to be challenged, how we onshore, or at some point we talked about nearshoring, and nearshoring was Canada and Mexico. Since we've now applied tariffs to those countries, it's unclear how U.S. manufacturers will navigate. So we're exposed. The corporate America is exposed, especially those in the industrial arenas. Technology, perhaps a little less so, although we have exposure to what's taking place on the chip front. But the implications here on the market we've seen today, you've seen a sell-off of $2 to $3 trillion. Risk is off today. Before today, you had a little bit more risk on. You look at the volatility index, which is the VIX. Historically, it's averaged 20. Now you're at 25 or so. If you look at the options on VIX 50, which gets to the high end of risk, we see more activity in those options than what we've seen in quite some time. So you now are in a relatively complex environment with interdependency having to do with the supply chain for all the goods and all the products that we consume. We're going to have to be able to manage through that.
Bob, you mentioned that this is going to cause inflation, and it's also going to cause some sort of deceleration in growth. People argue that tariffs in the long run are disinflationary. It's a one-time price shock, and then it gets absorbed and it's sort of part of the mess to get to a final goal of bringing more domestic production, reviving more domestic production. What's your outlook? Do you think that it's going to look a bit different than that?
Well, to be a little bit technical for the moment, Lisa, you're right. It's a one-time supply shock, so that increases costs. And then it can level off, so the rate of inflation may not have gone up, but costs will be higher. To consumers, to our producers, the producers who compete with imported goods can now raise their prices. And I think in terms of the long run for us, I think it means less productivity, because the whole theory of trade is comparative advantage, so that every country gets the benefit of getting the most it possibly can for that which it is best suited to produce. And now we're interfering with that process, and it will cost us in terms of productivity and growth. I think this is about ideology, the decisions. I think it's about ideology, and I think it's not factor analysis grounded.
It raises this question about a time when, heading into this year, companies were talking about incredible dynamism, incredible expansionism, the idea of American exceptionalism. We were going to see a boom in deal making. Ray, do you think that that's just on hold, that that can come back? Or do you think that people are rethinking that in corporate executive offices?
Well, let's be clear about productivity and how it is that we transition. In order to rebuild the industrial infrastructure of this country, it'll take 5 to 10 years. So while we think about being able to remove ourselves from that supply chain dynamic, the reality is it'll take a while before we do that. Having said that, as I think about some of the tailwinds in this environment, you have, I don't know, $10 trillion sitting on the sidelines, $7.5 trillion on corporate balance sheets, $2.5 trillion with the asset managers. You have $14 trillion or so of debt available, $2 trillion with the asset managers, $12 trillion with traditional banks. Will we need to somehow deploy that capital to continue to grow? The answer is yes, we will. So I have, on the one hand, a lot of capital that is pent up. On the other hand, notwithstanding the sell-off that we're seeing in the market today, which brings it back down to still what is a pretty historical high. We're trading at 20-some-odd times next year's forward earnings. So I look at the dynamics of the resources that we have and how we deploy those resources and the pent-up demand for growth. So we will pause for a while as we understand and interpret the implications of the tariff dynamics. And once we get to a new normal, then at some point we will re-engage. Will it be at the same levels that we've re-engaged historically? Unclear.
Yeah, but do you think that we're going to have that boom in M&A, that boom in deals that everyone was expecting that's been propelling financial stocks higher?
Well, we had the prospect of that, didn't we? When we came in, we thought that there was going to be, because of the factors of availability of capital, where the market was going, and we also thought there was going to be a relaxation in some of the regulatory environments having to do with what took place in the M&A environment last year, where regulators came in and upset a few of those transactions, said no to a few, implications which are pretty severe on a few of those companies that were not able to merge. And given the pent-up demand and demand for growth for these companies, and I think you will see some once the first move in the tariff environment, once that move gets digested, the implications of which are still going to be long-term, as Bob referenced.
Well, and Bob, something that you talked about is that one of the foundations to the business climate in the United States has been some level of predictability.
Is what?
Some level of predictability.
Oh, boy. Yeah, and I think what we're doing, absolutely, Lisa. And I think that goes even beyond that. The rule of law underlies our economy. And I think and that gives you certainty and predictability. And I think a lot of what is going on is adversely affecting confidence. It is now, and I think will more so in the future. Confidence in the rule of law. This whole discussion about retribution and the use of the law enforcement agencies of the United States to attack our opponents rather the administration is a good example. I think this, as I said a moment ago, I think the violation of our treaty obligations to Mexico and to Canada. So yeah, I think that predictability and confidence are essential and underlie our economy. And I think another good example, if I may, of something I think is doing tremendous damage, which is Doge. I've spent my entire career focused on fiscal discipline. We balanced the budget in 1998, first time in 30 years. I think we knew what the heck we were doing. I don't think these people have the foggiest notion what they're doing. And I think DOGE is doing tremendous damage to government and to the recipients of government services and government activities. Now, are there excess expenditure? Are there inefficiencies and is there excess regulation? Yes. But you approach it with a rational cost-benefit analysis, not a burn and the burning down of what exists, and then the thought that you rebuild it. And I think we really are doing tremendous damage to government and to our economy.
Ray, you're nodding. Do you want to add in? Or you're like, no?
The answer is, the response is, as you think about the world, geoeconomically and geopolitically, the anchor, the sacrosanct anchor that the U.S. has is rule of law. It has never been a factor in any conversations that we've had up to this point.
Is it a factor now?
It is moving into the conversation in ways that we haven't visited historically. So we need to be very mindful of conversations that today. It is not central to the conversations, but it has now become part of the conversation where historically it hasn't been.
One thing that some people would argue, the Trump administration argues, is that this is an effort to rearrange a system that has been structurally disadvantaging the United States, especially when it comes to China. And they make the argument that you need to play tough and do different things to try to shake up the status quo. Are companies still talking like that? Do they expect this to just be a negotiation, that they're, to Ray's point, Bob, that there will be a new normal that will emerge, and that the second half of this year will have a more stable kind of foundation that's more visible for corporations?
Well, what kind of a new normal do you want to have, Lisa? I think that the norm. No, I'm serious. I think there's a new normal of irrationality, and I don't think that's going to be helpful to our economy. I think our new normal ought to be to return to sensible cost-benefit judgments about everything that we do in terms of public policy, and I think we're doing exactly the opposite right now.
What we're hearing from companies, Ray, is that there could be some reasons behind some of the tariffs, and some investors have come out and said that tariffs are a tax, but some have said,
Well, they are a tax.
Some have come out and said that, that they can manage through this. The U.S. economy is strong and resilient, and once we're past this negotiation tit for tat, they can continue with the growth plans, and they still are optimistic about the consumer. Ray, have you heard anything different than that?
I think there is optimism still, but optimism maybe without the same level of conviction, right? So the randomness that appears to be at play here is not one that gives boards and CEOs a lot of confidence. So whatever the new normal is, will they react? The answer is they will react whenever we get there. If it's a new normal of continued unpredictability, then it's not quite certain how aggressive people are going to act. So I would continue to pay attention to the volatility index. I would continue to pay attention to the 10-year Treasury, which I think what the administration is currently looking to as guidance, and see if we get to a new normal, what that new normal looks like. It's not clear yet.
Bob?
Yeah, and if a new normal, Lisa, is the new normal in which the world has tariff walls, we have, because after all, we're going to have retaliation. We're having retaliation already. We'll continue to have retaliation. And if the new normal is a world of tariff walls, then we'll all just be less productive, less efficient, and less effective as economies. And our people will, as a result, do less well than they would otherwise have done.
You mentioned the 10-year Treasury yield, and Scott Bessent has made it, the Treasury Secretary under Donald Trump has made it very clear that the 10-year Treasury yield is his North Star in some ways, that he wants to bring yields lower. That is a requirement to deal with the deficit that we have. Is that how companies are thinking about it as well? Is this how people are thinking that actually 10-year Treasury yields lower?
How, pray tell, does he plan to do that? Seriously. This is something I know a little bit about.
Oh, yeah.
How, pray tell, does he... No, I'm serious. I was at Goldman Sachs 26 years. This is what I did for a living, and I was at the Treasury for 1 year. How does he want to bring 10-year yields down?
Well, he says that according to his plans, that there will be greater efficiencies through DOGE, but also through cost cuts.
DOGE isn't going to create greater efficiencies. What DOGE is going to do is tear apart our government.
But then he also
What you need are
says-
greater efficiencies, and the way you do that is you look at the excesses in both regulation and government, and then you approach them with a reasoned cost-benefit analysis, not slash and burn.
Well, the 10-year Treasury yield has been down every single week since
What?
Donald Trump. The 10-year Treasury yield has been down every single
Yeah,
week.
because people are starting to worry about the economy.
So then I would ask you, Ray, at a certain point. No, and I will.
I'm now being excluded from the conversation.
I want to go back.
All right, no, I'll sit here totally quiet.
No, I would love to have to further the conversation.
On this one, I'm yielding to the
I know.
secretary. And I'm looking at the chart here, and unfortunately, he happens to be right. So,
Well, no, this is really the key question. And actually, to your point, there has been this theory that if yields go down, you end up with more economic dynamism because companies will invest more. And that has been the Fed put, right? This idea that if they lower rates, that will encourage people to spend more. That is not what we're seeing in markets. That is the opposite. What we're seeing is yields lower, risk off, people scared.
Yeah, exactly.
To your point. And Ray, to your point, from your perspective, do companies see yields lower as a positive shift before when we were talking about the potential for rate hikes? Or are they growing increasingly concerned, to Bob's point, that this really represents a pretty massive and seismic shift in the economy?
remember, we're responding real time, right? I got a pretty low 10-year, and I got a stock market that sold off $2 to $3 trillion today. And a VIX that's gone up by 20%. So the data is, and I got a conference call that's taking place now up north, and I got one that's going to take place
Not
tonight.
letting you leave.
I got one that's taking place tonight that we're all going to witness. So the question is CEOs are waiting to digest as much, and boards are waiting to digest as much of this information as they can, and then somehow position themselves for what the world is going to look like after the next 2 days or so. But it won't be just that. They have to look at the entire supply chain infrastructure and how it impacts what they do, as will the U.S. consumer. And if you go through and look at the implications on the large retailers out there, both electronic retailers and food retailers, look at consumer staples. For some reason, consumer staples are up. I'm looking at some of the companies with which we interact every day, and their stock seems to be moving in the right direction. Well, right direction means the stocks are moving up. And I'm looking at this, and you're looking at the VIX here.
It's easier sometimes to talk about what the market's doing than to
You
really
have a
weigh
bot working here, so it's something that we suggest you put a slide up.
You can just keep talking about this, Bob. I want to come back to you about this idea
I
of
thought you were excluding me.
Did you feel it?
Now you want to come back to me? I may not engage, having once been excluded.
I think you'll engage. I'm
You
curious.
nailed it on the
You said-
yield, so she's a little bit.
You're talking about how you have quite a bit of experience as being the Treasury Secretary.
Ton of experience, but go ahead, yeah.
And and you said, how is he going to bring down 10-year Treasury yields? And right now, we see them dropping.
The best way to bring down treasuries is to have a sound economy, and then have, in response to that, have sound monetary policy, and then have treasury yields adjust accordingly. You don't want to have yields go down because people are concerned that we're going to have a weak economy or that we may run into growth problems.
It raises this question, even if these tariffs come off, even if they're rolled back,
If what rolls back?
the tariffs.
Oh, I'm sorry.
If they are being used as a cudgel of sorts, how long can this uncertainty remain before just the idea of having uncertainty is really pernicious for growth?
Keynes famously said that confidence underlies economic activity, and confidence is predictability. And I think that the actions we're taking, the tariffs, the immigration actions that we're taking, what we're doing with DOE, which, as I said, I think doing tremendous damage to government and ineffectively addressing what is a real problem, which are inefficiencies and excess regulation. I think all of that have not only substantive effects, but adverse effects on confidence and unpredictability. And I think all this talk about retribution, of which there's been a lot of talk, I think feeds that lack of confidence and unpredictability.
Ray, from your perspective, how long can this go on before companies that are delaying some of their investment plans just take them off the table?
You know, I think it's early days. Again, I think you're in the early innings of this tariff diplomacy. And companies are pretty wise and thoughtful about how they engage. This still remains the largest, used to be the fastest growing economy that exists on the planet. So there's still confidence in what's taking place in the U.S. Notwithstanding the lack of predictability. A lot of reserves, a lot of capital reserves, a lot of pent-up capital that needs to be allocated. So I don't think there's going to be a rush to judgment. Having said that, the more the actions are unpredictable, then that goes to the level of confidence that exists with senior managers and boards. They will wait this out to see what the implications are and how severe the implications, and then take a decision on how they're going to move forward.
Is the United States still the best place in the world to invest?
I would rather, that's a good question, Lisa. I would rather invest here than any other economy, but of course that a little bit reflects on what's going on elsewhere, China, Europe, et cetera. I mean, those are all places with tons of problems. But having said that, I think it's the greatest uncertainty. Having said that, I think it's the greatest uncertainty in the 26 years that I've been involved, or rather 60 years roughly, that I've been involved in decision-making of one sort or another with respect to markets and economies. And I think those risks have been substantially increased, as we discussed briefly, by the actions of the administration or the prospective actions of the administration. I think one other thing, if I may, Lisa, I think we have an unsustainable fiscal trajectory. And I think that is what the administration says. The problem is I don't think they go at it the right way. I think you can be rational about trying to save some money, and I think we can save some. But I think as a practical matter, that is a very limited, an opportunity, but a very limited opportunity. And fundamentally, we need more revenues. And if you look to tariffs for revenues, you'll get more revenues, but you'll just be adversely affecting growth. And the offset of that is probably, and I've had this modeled for me actually, the offset of that is a very small, if any, net increase in revenues. But the answer lies predominantly on the revenue side.
Ray, your thought about whether the United States is still the place that everybody wants to invest?
You know, without reservation, longer term, yes. If I look at the advances that have been made in technology, the Max 7 being examples, if I look at all the advances that we're making across the landscape, notwithstanding our dependence on supply chain in many ways, this still is the most attractive, the greatest country that exists.
What about next 6 months?
We're going to go through some challenges over the next 6 months. We'll be challenged. Will we get through them? The answer is yes, presumably. Now, the challenge I have is that it's a historical mindset. We've not seen factors come into play historically the way we see today. And so, and I say that with a bit of conviction, not necessarily the hope, but a bit of conviction. Hope will always be there, but conviction that we'll get through this.